The US dollar in danger. The biggest trading event so far of 2024 is upon us tomorrow. Let's break down the latest. Morning, 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 baby. Happy Tuesday. I hope we're all well and truly lit. Yes, we are back with another day in these beautiful markets. And of course, the markets are well and truly open and in motion as we get this week underway. As I said to you guys in a week ahead analysis, this is a monumental week. This is the biggest trading week of 2024. I cannot stress this enough. Well, the biggest trading week so far of this year. And to be honest, I can't imagine a trading week being bigger than this. Maybe election week, we'll see. But this one's big because, we're entering that new cycle, as I explained in the week ahead analysis. We've been in this cycle of boom, right, where we're raising interest rates, inflation's on the rise, all of that good stuff. But now we're seeing slowdowns in the economy in the United States, in the broader global market. China and all other major central banks are starting to cut rates now. Apart from Bank of Japan and the RBA and RBNZ, not quite so much yet. But most major central banks are in that cutting cycle as we get ready for these these significant slowdowns, and perhaps even recession, which obviously I'm working away on at the moment. I'm still doing a lot of recession analysis, okay, where we're going to deliver content around that in a separate channel. But man, we are in interesting times. I cannot stress that enough. So we're at the point now where the FOMC is set to cut rates as we enter this new cycle. It's just how much are you going to cut by FOMC? You're going to deliver that 25 basis points as the markets were expecting, a few months ago, ready for September. Or are you going to deliver 50 basis points and go hard because perhaps you foresee something, that's a risk to the United States in terms of us slipping into recession, and we need to take that drastic action, and that is drastic, a 50 basis point cut after having rates for high for so long, and to go right in with a 50 basis point cut, extremely dovish action, that is drastic. All right, 1 minute, guys. It's big week, as you can tell from the energy. The energy has to be there so that I am finger on the pulse for this on Wednesday, okay? For everything. Now, obviously, structurally, we've gone over this. The dollar's lost its momentum to the upside. We are clearly in a bearish trend here, where obviously printing lower highs, lower lows, flag breakouts, pennant breakouts, a nice little wedge breakout to the downside here. Everything making sense. Now, the way in which the dollar is moving right now is in anticipation of dovish FOMC. That's it. It's anticipation of dovish FOMC on Wednesday, tomorrow, guys. Okay? That's the way the markets are moving right now. Now, interestingly, look here, guys. Look at it. 67% chance that they're going to cut now by 50 basis points. That's what markets have seen as the probability there. 50 basis points is now the general consensus. That's huge. I stand really firmly, especially everything that I'm reading on and getting ready to prepare you guys on. I stand extremely firmly that if the FOMC cuts by 50 basis points, we are fucked. Market. Sorry. I know stocks are obviously pumping right now, right? And we've obviously been capitalizing on. Obviously, you'd see the trades coming through in the auto trade, running really nicely at the moment with this push to the north that we're seeing in stocks. I know we've got a few more buy stops that are set to potentially trigger today with indices, but indices are really running with this narrative right now as that probability ramps up to 67%. It's huge, guys, okay? Really, really huge stuff. So let's carry on. Look, if we take a look at today, firstly, just with this dollar index on a technical level, we're obviously at this key area around this mid 100 mark, all right, which is vulnerable to just really, we're challenging this support again. And there'll be a lot of stops there. If anyone's long dollar, there'll be a lot of stops here, which will likely be, if we take that out, it's going to exacerbate the move to the downside. It's going to trigger, stops will be triggered to the downside, and we'll have quite a fast fall in towards these lows here. Now, this is going to be interesting because we could have the scenario where today, guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify, because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, you know, why is the price just spiked here because of this fundamental reason? I don't understand it because all this information is over, you know, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. We have US retail sales. US retail sales are expected to cool. All right, understandably, because we have seen a bit of a slowdown in the United States with economic data, with labor market. If the labor market is slowing down, right, less people in the workforce, less jobs being added to the economy, wages are not too bad, to be fair, not too bad, but we're getting less jobs being added to the economy. So we're seeing a slowdown in the labor market. With that slowdown, right, there's not enough cash, not enough stimulation going around. So perhaps we see these retail sales cooling. Okay, look, the data the last couple of months has been all right. It's been all right, but we're expecting a change now in tide. Okay, so keep that in your minds, because back to the scenario, what I was just saying there. If, for example, the data comes out worse, retail sales, we're going to slip below this 100 mark. We're going to come down to these lows of 2023. Now, we will probably remain there. We'll find support there. We'll be caught. That falling knife essentially will be caught. Okay? Dollar will be caught in a safety net ahead of FOMC. And that level there, here, is going to be huge, because it decides whether the dollar is going to free fall on a 50 basis point cut initially. Right, and look left with me. Boy, would the dollar be in some trouble near term? Okay, short term, medium term, long term, the dollar will think that momentum will find its up feet again when the recession fears kick into gear on a global level. But initially, you can see the room that it's got to head south. Wowza, huge. Now, one thing I must stress here. What's happening technically here, motherfuckers, do not get it twisted. Okay? You technical guys. I am a technical guy, right? That's how I find my entries. I understand what's going on a macro level to drive this technically. The macros drive the technicals. And I'm calling those motherfuckers, and they know exactly who they are. Okay? They know exactly who they are, because they try and get me to bite, but I'm not biting, right? They try and get me to bite, but I've got a lot of content to shit on them that say fundamentals follow the technicals when they do not. They do not. I am going to adopt you. I'm going to adopt you. And you will see who your daddy is. Okay, when all this content comes out, and obviously got this recession, you know, got you prepared for the recession. Anyway, sorry guys, just you can see I'm pumped today. See, I'm absolutely pumped with energy. So that's your scenario there for the dollar. You know, we'll take it as it comes. Obviously, we trade what we see at the end of the day. You know that. We trade what we see. But yeah, it's a big day today for the greenback. Guys, I hope you found value once again in this snippet taken from one of our rundowns. Obviously, every day we're breaking down the markets. We are in highly interesting and exciting times right now as we're entering into a new market cycle. I've got a lot of value coming for you in the coming weeks, guys. If you did find value in this, please do smash up the subscribe button and the like button as always, and drop a comment. As I say, it continues to incentivize me to provide you guys more value, and there's a lot more that we can provide. If you do want to take your knowledge to the next level, of course, you can check out the Fundamental Bootcamp course via the link in the description. Other than that, stay lit, stay blessed, and let's get it.